Well, we've been saying all through this earnings season that IT might just spring a surprise, and till now, large cap and mid cap IT have managed to do that. Wipro has nudged past the conservative guidance that they'd given. More importantly, the differentiating factor is that a lot of verticals, which were probably the problem points, have started to perform, or at least have performed in this quarter. Let's get in the top management of Wipro to talk about how the quarter was, more importantly, how the next 3 quarters could look like. And the top management joins me right now on earnings call. Gentlemen, thanks so much for joining in. And TK, let me start off with you. Q1 is typically soft and reflected in your performance. But do you believe that with the problem areas having been settled, the quarters ahead could look much better?
So, the funny thing, Niraj, was that last quarter was a good quarter in a couple of ways. One is that as far as our core market is concerned in the US, it showed a sequential growth quarter on quarter of 2.8%. In fact, if you look at the US market, it's grown roughly 10% year on year. So that's a positive. The second positive, if you look at the results, is that some of the new age businesses that we have, for example, like analytics, have really fired. Analytics has grown more than 5% last quarter. Our retail business has grown 5% last quarter. Our manufacturing business again has taken off. Our energy business, in fact, contrary to what you just mentioned, last quarter has been a bad quarter for us because it showed negative growth. The positive news is that Q2, we see the market kind of bottoming out and we see growth coming back. So that's the positive news. More importantly, what we're seeing in the energy business is that as companies come up for consolidation of vendors, we're winning. And there have been some deals announced recently where we have actually won share. So that's been a huge positive for us. So in many ways, what happens is that the headwinds that we had in the past couple of quarters are slowly kind of dying away. We just hope that in the next couple of quarters, it'll do better. At least Q2, based upon the guidance that we have given, is looking significantly better than Q1. And we've also messaged that the second half would be better than the first half. So overall, I would say positive.
And I'll have more questions on that, TK. But I just want a quick word on geographically how things have looked as well. Do you think US can see a stronger performance? Will Europe performance also improve now that things just look like they're back on the stability front? Because your volume growth, I mean, there is hardly any growth in Europe in the last 12 months. Can things improve there?
You're absolutely right, Niraj. And I think that's an area of concern for us. Part of the growth has been vitiated by the currency. But having said that, that's no excuse. That's the reality of the situation. If you look at our growth in Europe, most of it has been actually vitiated by the energy segment. A large part of our customer base, especially the large super majors, are based out of Europe, and their decline in the oil sector has affected the revenues coming out of Europe. But having said that, we see one more quarter. Q2, we expect that to be soft as far as Europe is concerned. But Q3 onwards, we see growth coming back.
It's been over a quarter now. You would have settled down nicely. How are things looking like? One. Two, the currency, as most experts seem to be believing, and as we see on the ticker as well, is not playing spoil sport. You think that should augur well for the next 2 or 3 quarters as well?
The way we manage it is we manage the volatility well from an expectation standpoint because we always guide in constant currency, and that's the number that management also works with. So we are able to share a true operations performance back to the shareholders at the end of every quarter. And to that extent, the volatility of the currency is sort of managed well. So that it does not vitiate the final results to the shareholders.
Yeah, which is true, but I'm just trying to figure out the impact that currency and wage hikes and visa costs can have for you as a company. Partial impact was expected, but do you think Q2 could be a bit tougher because of the full impact of these factors?
Yes, absolutely. I'm sorry, Niraj, I missed that. Yes, for the Q2, you will have 2 months impact of MSI, which will flow in the operating margin, and that will have to manage through better performance on operating levers that we traditionally worked with to sustain and enhance our operating margin. The second thing would be that currency will remain an uncertain area, but as I said, that we sort of manage with a constant currency guidance, and I would not worry too much about it from an operating margin standpoint. Whatever comes, we will live with it.
Saurabh, come in on this since we are actually on that trend. Attrition for the industry at large seems to be up. I mean, my interactions with some of your peers also indicate that while it's not a big problem, it's certainly picked up a bit for the industry at large. How difficult is it right now for you as a company? Where do the attrition rates stand compared to the last quarter?
So Niraj, I'll speak about attrition, but I'll give you a flavor of the entire supply chain, and that's important because it's one part of the entire supply chain. So first of all, attrition for us has been, if you see, in a very narrow band across the last 6 quarters. It is manageable, it is predictable, it is in a narrow band. While it is a focus area, especially for top talent people and technical people. And that will be continued focus for us. But if you look for this quarter, we had given a wage hike of both on-site and offshore of 7% and 2%. We have given promotions to people. We have given equity stock options to our leadership. So all these actions have been taken, which will help us sustain as we move forward. Also, if you see, we had a healthy additions, from a net add perspective and higher utilization. So if you put all the 3 pieces together of hiring, utilization, attrition, I think it's been a very good, robust performance for the quarter. And we hope that this is the way it will continue in the next quarter.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.